I think we can start now. Thank you so much for joining. I have with me Tanmay, who's the head of operations here at MProfit, and I'm the product manager. We will be taking you through the capital gains webinar today. We do this every year, wherein we show you what are the capital gains rules across different asset classes, from stocks, mutual funds, equity, debt mutual funds, traded bonds, sovereign gold bonds, REITs, and InvITs. Right. As you know, we had already done a webinar a few months ago explaining the budget changes, but since we are very close to the tax filing date, we thought we should do a revisit to all the capital gain changes which are happened and how MProfit can help you see those capital gains, right? Uh, We'll be covering all the changes which have happened as per the Union Budget 2024 and the impact it will have on all the different listed asset classes and the unlisted assets as well. Along with that, how MProfit can actually support you through our capital gains reports that we provide and also certain tax software formats that we are supporting. All right. Um, uh, this webinar is strictly to show you the capital gains impact as per the budget rules, and MProfit divides your capital gains into long term and short term and classifies it as per the income tax guidelines regarding these provisions. But just a caveat here is MProfit will not calculate the tax amount of either for long term or short term. We will definitely discuss what are the new tax rates which have come up in the budget, which impacts the financial year 24-25 capital gains. But MProfit will show you a capital gain report dividing your capital gains into long term and short term. Okay. So yeah, I think we can start now. The main change which has happened in the union budget was that from 23rd of July, there is a standard holding principle, which means if you're holding any listed assets, listed meaning any stocks, mutual funds, bonds which are listed on the stock exchange, for all of those listed assets, the holding period will be 1 year. That is, if you're holding any listed asset for a period longer than 1 year and then you're selling it, it will be classified as long term. Anything where the holding period is less than 1 year will be automatically classified as short term. In case of all other assets, basically any asset which is not listed on the stock exchange, the holding period is 2 years. So if you're holding any asset for a period longer than 2 years, it will be classified as long term. Otherwise, it will be classified as short term. So this is the main standard holding rule which has happened since the 23rd July, wherein they have generalized the way holding period has to be calculated for a listed asset and for a non-listed asset. Uh, as you know, in mutual funds, there has always been some, definition rule changes regarding equity, debt, hybrid. In financial year 24, there had been certain category definitions. That same category is carry forwarded to financial year 25 as well. So we will just quickly recap what these mutual fund categorization means, because basis these categorizations, the long-term, short-term rules will change. So there are two main principles. One, when the mutual fund is purchased, whether it was purchased before 1st April 2023 or purchased after 1st April 2023. If your mutual funds have been purchased before 1st of April 2023 and the equity exposure of that specific mutual fund is greater than 65%, it will be automatically categorized as an equity mutual fund. If, however, the exposure to equity is less than 65%, it could be a gold or a silver fund or a pure debt fund, all of those will be categorized as a debt mutual fund, right? So the cutoff is 65%. As long as your exposure is above 65% in equity, that is in direct stocks, then the category is equity, otherwise it will be classified as debt. However, if you are purchasing the mutual fund after the 1st of April 2023, then there are three different categories of mutual funds. If the exposure to equity is directly greater than 65, it is classified as equity. If the exposure is less than 35%, it gets categorized as debt. If it is between 35 to 65, it gets categorized as hybrid mutual fund. So if the purchase date is before 1st of April 2023, it's a simple rule, greater than 65 equity, less than 65 debt. But if it is purchased after 1st of April, there are three categories. Greater than 65 is equity, less than 35 becomes debt, and anything between 35 to 65 is categorized as hybrid mutual fund. And according to these rules, equity, hybrid, and debt, the taxation will also change, and the classification of long term, short term, the rule will also be different. Okay. Now let's start with the first asset class, which is stocks and equity mutual funds. There has been no change as per the Union Budget 2024 here in the holding period rule. The holding period remains same, that is 1 year. So if you're selling the asset within 1 year of purchase, it will be classified as short term. If you're selling it after 1 year of purchase, it will be classified as long term. The only difference here is the taxation angle, which means if you're selling before 23rd of July 2024, which is the date, the cutoff date, which as post the budget which has been identified, if you're selling it before 23rd of July, the short term capital gain is 15%. The tax on STCG will be 15%. LTCG will be 10%, and you will get an exemption of 1 lakh rupees on your entire long term gains. If you're selling any stock or equity mutual fund after 23rd of July 2024, then the short-term capital gain tax will be at 20% and the LTCG will be at 12.5% with an exemption limit of 1.25 lakhs. So for this asset class, stocks and equity mutual funds, there is no change in the holding period, but the only change is in the tax rate and the exemption limit for long term. Right, we will just quickly show you now how you can check your capital gains in MProfit for stocks and equity mutual funds. Over to
Sure,
you.
thanks, Radha. So I'm just changing my screen to MProfit app. To show you this example in MProfit, I have added one stock, Infosys, and as you see, uh, there are two or three different transactions. The stock was purchased in April 23, sold in April 24, which is less than 1 year, on 1st of April 24, and also sold again, as partial quantity is sold on August 24. So to generate the capital gain report, you can simply go to the report section, select capital gains ITR format, and you can select stocks category. I'll select last financial year, which is 24-25, and generate the report. Now, MProfit will automatically handle this calculation. I guess there is some issue with my internet seems. That's the reason it's not loading the report quickly. Yeah. So as you see on the screen, it has calculated the capital gain. So if you see both the purchases, the main purchase was on April 23, and the first sell was the holding period was less than 1 year, less than 365 days. So you can see the sell date as 1st April 24. It is calculating it as a short-term capital gain. And similarly, if the holding period is more than 365 days, that is the sale date is 30th of August 24, it will consider a long-term capital gain. This system is doing this automatic calculations. Same goes for the equity fund as well. So just to show you the equity fund, if you look at HDFC Large Cap Fund, this is again an equity fund where this was purchased on May 23 and sold on April 24 and August 24. To generate the report, you can go to report section again, capital gains, and you can select MF equity. So this will calculate the capital gains for your equity mutual funds mainly. The criteria is same. There is no change in the FIFO calculation. It's 1 year LTCG. So less than, if the period holding period is less than 1 year, it will be considered as a short-term capital gain. If the holding period is more than 1 year, more than 365 days, it will be considered as a long-term capital gain. I guess the report is taking some time to load. Maybe rather we can move ahead because for
Yes.
stocks and equity mutual funds, the calculation is exactly same. There is no difference. But we can move
Correct.
to the next slide.
Yes, sure. Next, going ahead, we go to the debt mutual funds. In this case, the debt mutual funds which are purchased before 1st of April 2023. In this case, there are two rule changes depending on the date on which you are selling. So if you are selling a debt mutual fund before 23rd of July 2024, then for consideration of a long term, it has to be held for a period of 3 years. If it is sold within 3 years of purchase, it is going to be classified as short term capital gain. The tax for short term will be as per the slab rate to which the investor belongs in. For long term, the tax rate will be 20% with indexation benefit provided. If you're selling a debt mutual fund which was purchased before 1st of April 2023 but sold after 23rd of July 2024, in that case the rule here changes and the holding period is now reduced to 2 years. So if you're selling it within 2 years from the date of purchase, it will be classified as short term. If you're selling it after completion of 2 years, it will be classified as long term. The tax rate for short term remains same, it will be as per the slab rate, but for long term, the tax rate will now be 12.5%, but indexation benefit will not be provided. So, to summarize, for a debt mutual fund purchased before 1st of April, the rule differs basis the date of sale. So, if you're selling it before 23rd of July and you're selling it within a period of 3 years, then it will be classified as short term, otherwise long term. For long term, the tax rate is 20% with indexation. If you're selling these mutual funds post 20 on or after 23rd of July 2024 and you're selling it within a span of 2 years from the date of purchase, it will be classified as short term. If it is sold after 2 years, it will be classified as long term with the tax rate being 12.5% but with no indexation. And for short term, the tax rate will always be as per the slab rate. Okay, now we can just quickly see the example of a debt mutual fund in both these categories and MProfit.
Yeah. So to understand the debt capital gain calculation, let's take an example of Aditya Birla Sun Life Mutual Fund, which is a debt fund. The criteria is if the fund is purchased before 1st April 23 and sold before 23rd of July, what will be the calculation? Okay, so I have added a couple of transactions as you see to fulfill the criteria. The purchase is before 1st April 23 and sell transactions are also before 23rd July 2024. Okay, now in this case, as the sell transactions are before 23rd July 2024, the criteria is for 3 years, it's a short-term capital gain, less than 3 years, and more than 3 years, it's a long-term capital gain. So to show you the report, let me just show you one report which I have already generated. I'll just open that report. So if you see the very first row, Aditya Birla Sun Life Medium Term Plan Growth Regular Plan. This was purchased before 1st April 2023, that is on June 2021, and also sold before July 2024, 23rd of July 2024. If this is the criteria, depending on the number of holding days, it will show you the calculation, it will show you the capital gains. So if the holding period is less than 3 years, which is the first use case, if you see the first row, it will show it as a short-term capital gain. So you see 63,000 as a short-term capital gain. Similarly, if you see the long-term section and the second entry, in this case, the fund is sold after 3 years, but again, the sell entry is before 23rd July 2024. So in this case, it will show it as a long-term capital gain. Let's take one more example. I'll close this report. Let's take one more example of another fund, Kotak uh, Bond Short-Term Fund, where again the fund is purchased before 1st April 2023, but sell is after July 2024. Now, in this case, the criteria is different. For if the holding period is less than 2 years, then it's a short term. If the holding period is more than 2 years, then it's a long term. So I'll open the report again just to show you this particular fund. So if you look at quoted bond short-term fund, which is the third entry from the top under short-term section. The purchase was on July 2022. The sell was after uh, the cutoff date, July 2024. It is considering as a short-term capital gain because the holding period is less than 2 years. Similarly, if I go to the long-term section, you can see the third entry, or from the down, it's second last entry. You see the purchase is on July 2022 and sell is on August 24, which is more than 2 years. So it will calculate it as a long-term capital gain. There are two examples I have added, and system will automatically identify the transactions if it was purchased before 1st April 2023, sold before 23rd July 24, or sold after 23rd July 2024, and automatically calculate short-term and long-term capital gains. So let's go to the next slide. This is the criteria which we covered for debt mutual funds purchased before 1st April 2023. The next criteria is basically if the debt mutual funds purchased after 1st April 2023.
So in this case, whenever a debt mutual fund is purchased after 1st April 2023, it does not matter when you have sold it. It will always be considered as short term, and the tax rate will be the slab rate. That is, it will be added to the investors' total income and be calculated as per the provisions. So it does not matter whether you're selling it before or after 23rd of July, irrespective of the holding period, 1 year, 2 year, or 3 years, debt mutual fund will always be classified as short term, as long as it is purchased after 1st of April 2023. And we'll just show you one example for that as well.
Yeah. So to understand debt capital gain calculation, if the fund is purchased after 1st April 2023, let's take an example of one more fund, HDFC Low Duration Fund. In this case, as you see, the purchase is after 1st April 2023, which is on 30th of June 2023, and sell can be any time within 1 year, within 2 years, 3 years. It will always consider it as a short-term capital gain. So I'll just show you one report. So in this case, if you look at the fifth entry in the short-term section, HDFC Low Duration Fund, the purchase was on June 2023 and sell was in October 2024. No matter when you are selling a fund, if purchased after 2023, it will be considered for a short-term capital gain only. So even if you are selling it after 1 year, 2 year, 3 years, it will be still be shown as a short-term capital gain. Okay, let's go to the next slide.
Which is for the hybrid mutual funds. Right now, for hybrid mutual funds, again, the date of sale becomes very important. Here, the purchase date does not matter like it did for debt mutual funds. For hybrid mutual funds, only the date of sale becomes relevant. If you are selling any hybrid mutual fund before 23rd of July 2024, and if the holding period is less than 3 years, it will be classified as short term and will be taxed as per the slab rate. If you are selling it after a period of 3 years, then it will be classified as long term and the tax rate will be 20% with indexation benefit provided to you. So if you're selling it before 23rd of July, holding period is 3 years. For short term, it will be classified, it will be as per the slab rate, and for long term, it will be 20% with indexation benefit provided. However, if you're selling any hybrid mutual fund on or after 23rd of July 2024, in that case, the holding period becomes to 2 years instead of 3 years. So the short term is, if you're selling it within 2 years, again taxed at slab rate. If you are selling it after completion of 2 years, it will be considered as long term and it will be taxed at 12.5%, but no indexation benefit will be provided. Right? So in hybrid mutual funds, only the date of sale matters. Before 23rd of July, it is 3 years. After on or after 23rd of July, it is 2 years. And for short term, tax rates is same. It will be added to the total income and taxed as per the slab rate. For long term, in earlier case that is sold before 23rd of July, it will be 20% with indexation, and after that date, it will be 12.5%, but no indexation benefit provided. Okay. Now we'll just
Yeah,
show
so
you one
let's
example of that.
yeah, let's understand with one example of the hybrid mutual fund. So for that, there are two criterias. Now the purchase rate is not that important here, but the sell date is. So we'll check both the criterias. Let's take one example of quant multi-asset fund. As you see on the screen, the purchase was in June 2021, and there are two different sell transactions. Now both are before the cutoff date, that is 23rd of July 2024. Let's generate the report and see the taxation for this, see the capital gain calculation. As you see the second row here, quant multi-asset allocation fund. This was purchased in June 2021. And again, sell was before the cutoff date, that is 23rd of July 2024. But the holding period was less than 3 years. Hence, it is showing it as a short-term capital gain. So if you look at the second entry, it is showing it as a 30,000 short-term capital gain. Whereas if you see the long-term section and the first row, it shows quant multi-asset allocation fund as a long-term, because in this case, the purchase was in 2021. The sell was basically after 3 years, but again, the sell happened before the cutoff date. So the calculation for long-term is 3 years. If the fund is there is a sell after 3 years, it will be calculated as a long term. Let's take one more example. 361 fund. So I'll go back. I'll show you the transaction. 361 balanced hybrid fund. Now this is the second criteria I'm trying to cover, where purchase can be any date, but if the sell transactions are happening after the cutoff date, that is on or after 23rd of July 2024. So let's see this in the report section. So if you look at the fourth row in the short term section, you can see that this fund was purchased in August 2022, but sold on August 2024, which is less than 2 years. Hence, it is considered for the short term capital gain calculation. Similarly, if I scroll down, if you see the last row, this particular fund, again, the purchase date is same, was purchased on August 2022, but sold after 2 years. And of course, after the cutoff date, which is July 2024. So it is considering it as a long-term capital gain. Again, these classifications, calculations, you don't have to worry about. System will automatically find out the cutoff date, the purchase date, sell date, and rate. It will give you this calculation, this report on a ready-made basis. Let's go to the next slide.
Next, we go to traded bonds. Again, here, similar to equity stocks and equity mutual funds, there is no change in the holding period. The holding period for long-term classification will be 1 year. That is, if you're selling the bond within a period of 1 year, it will be classified as short-term. Otherwise, it will be classified as long-term. The difference here again is only in the rate of taxation for long term depending on the date of sale. So if you're selling any traded bonds before 23rd of July 2024, uh, and it falls under short term, that is holding period is less than 1 year, it will be as per the slab rate. But if it is long term in nature, then it will be at 10%, but with no indexation provided. If you're selling on or after 23rd of July only for long term, the rate of tax changes to 12.5%, and again there is no indexation benefit provided. So for traded bonds, it is straightforward. There is no major change in the holding period. It remains same at 1 year. The only difference is in the long term capital gain taxation. If it is sold before 23rd of July, 10% will be applied with no indexation provided. And if it is sold on or after 23rd of July, it will be 12.5% with no indexation. Although there has been no major change, I will just quickly show you how you can generate the report for traded bonds as well.
Yeah. So for this example, I have used two different bonds. So for this, we'll consider uh, the Piramal Capital Housing Finance Bond. As you see, I've added a couple of transactions. Buy transaction on August 23, sell transaction on May 24 and again a second sell transaction on August 24. Let's generate the capital gain report. So again, similar process, capital gain ITR format. And as we are generating traded bonds, I'll use the traded bond section. Yeah. So as you can see on the screen, the first transaction, the purchase and sell, mainly the sell transaction is within 1 year period. So that is it. That's the reason it is showing it as a short-term capital gain. Similarly, if you look at the long-term section, the sell is after 1 year, after 365 days for the Piramal Capital and Housing Finance bond. It is showing it as a long-term capital gain. Again, these calculations are completely automatic. And for traded bonds, there is a separate section available. Till now, I used stocks, mutual fund equity, and for debt and hybrid funds, MF debt hybrid option you have to use. The rest of the calculations are handled automatically by the software. So next, let's go to the next slide. Yeah, Radha, you are on mute.
Yes, sorry. Yes. Now for sovereign gold bonds, there has been a change in the holding period definition. If you are selling any sovereign gold bond before 23rd of July 2024, in that case, the holding period is 3 years. That is, if you are selling it within a period of 3 years, it will be classified as short term and the tax rate will be slab rate. That is, it will be added to your total income. If it is long term in nature, that is, if you're selling it after completion of 3 years, the tax rate will be twofold. One, if you want the benefit of indexation, it will be taxed at 20%. But if you do not take the benefit of indexation, it will be taxed at 10%. If you're selling any sovereign gold bond on or after 23rd of July 2024, in that case, the rule now suggests 1 year of holding period. So if you're selling it within 1 year of purchasing, it will be classified as short term and taxed at the slab rate. If you are selling it post completion of 1 year, it will be classified as long term capital gain and it will be taxed at 12.5%. But here there will by default be no indexation. So the indexation benefit is only available if you are selling it before, if you have sold it before 23rd of July 2024, and the tax at that will be 10%. So just to summarize, for SGBs, the date of sale becomes critical. If you are selling it if you have sold any SGB before 23rd of July 2024 and the holding period is less than 3 years, it will be short term. If it is greater than 3 years, it will be long term. 20% with indexation or 10% without indexation will be the tax rate. Selling it on or after 23rd of July, then holding period is 1 year. If you're selling it within 1 year, short term. If you're selling it after 1 year, 12.5% with no indexation for long term. And for short term, everything will be taxed as per the slab rate only. Okay, we'll just show you one example of the SGB as well here.
Yeah. So similar to the Piramal bond, I have also added a sovereign gold bond in the portfolio as you see. The purchase was on August 21 and there are two sell transactions, June 24 and December 24. You have to use the same report. You can go to capital gains ITR format, and you can select the traded bonds option to generate the report. So as per the criteria, if the bond is sold before 23rd July 2024, as you see in this case, will show a short-term capital gain. Of course, there is a criteria of 3 years. And if it is sold after 23rd July 2024, there is a criteria of 1 year short term, less than 1 year period. Holding period is a short term, more than 1 year holding period is a long term. So you can see that as well in this report. Yeah, so we can go to the next slide, REITs and InvITs.
Yes. Now for REITs and InvITs, again, the rule change happens depending on the date of sale. Uh, the cutoff is again 23rd of July. So if you're selling any REITs or InvITs before 23rd of July 2024, then the holding period of 3 years comes into play. If you're selling it within a period of 3 years, it will be classified as short term and the tax rate is 15%. for short-term capital gain. If you are selling it after completion of 3 years, it will be classified as long term and the tax rate will be 10% and you will get the exemption limit of 1 lakh rupees. If you are selling any REITs and InvITs on or after 23rd of July 2024, then the holding period now stands at 1 year, which means if you're selling it within 1 year, it will be classified as short term and taxed at 20%. If you're selling it after 1 year, it will be considered as long term and taxed at 12.5% with the exemption limit of 1.25 lakhs provided to you. So for REITs and InvITs, the selling date again becomes critical, like we have seen in most of the asset classes that we discussed today. If you're selling it before 23rd of July 2024, then the holding period is 3 years. For considering of short term, if you're selling it within 3 years, it will be considered as short term with a tax rate of 15%. If you're selling it after completion of 3 years, it will be taxed at 10%, considered long term with the exemption limit of 1 lakh. If you're selling it on or after 23rd of July, the holding period becomes 1 year now. So if you're selling it within a period of 1 year from the date of purchase, it is short term, taxed at 20%. And selling it after completion of 1 year, it is long term, taxed at 12.5% with the exemption limit of 1.25 lakhs provided to you. We'll also quickly show you one example of a REIT asset class as well.
So as you see on the in the portfolio, for the management purpose, for data entry purpose, or if you are importing the contract note and the transaction, the REIT InvIT transaction is available in the contract note, that gets imported into the stock section. But definitely the capital gain calculation is different for normal stocks and equity funds. And it's obviously different for REITs and InvITs. So this is the transaction. There are few transactions I have added. Again, August 21 was the purchase date and two sell transaction on June 24 and December 24. To generate the report, you can go to the report section, capital gains, ITR format, and there is a separate section available for InvITs and REITs. I'll just use that. The period is already selected last financial year. I'll simply generate the report. So as you see on the screen, it is automatically classifying it as a short term and long term based on if the asset is sold before 23rd of July and if the holding period is 3 years, it will be considered as a less than 3 years, it will be considered as a short term capital gain. If the asset, the bond is sold, sorry, the REIT or InvIT is sold before 23rd July and the holding period is more than 3 years, it will be considered as a long term. Similarly, this criteria changes if the REIT InvIT is sold after 23rd July 2024, where if the holding period is less than 1 year, it will be considered as a short-term capital gain. If it is more than 1 year, it will be considered as a long-term capital gain. So again, this is a completely ready-made report. If you have any REITs invest transactions, you can simply generate this report and get your capital gain valuations.
Now, before we move to buyback, there has been a significant change in the way buyback will also be now considered. But before that, Tanmay, we can just show them the various tax software formats so we can just close the capital gain aspect of this.
Sure. So I have showed you capital gains ITR format, which is a MProfit standardized format. Obviously, it has all the details required, including ISIN code, or for LTCG, the FMV price is required. Obviously, that is available. But other than standardized capital gains ITR format, we also provided tax software formats. So in case if you are using any of the tax software, maybe a clear tax portal, for example, to file the returns, or if you are submitting your capital gain reports to your chartered accountant, most of the cases, chartered accountants use this different tax softwares to file the returns. Winman, Computax, Spectrum, Genius, Tax Pro, and system and profit system can generate your capital gain data in this tax software formats so that you don't need to rearrange the columns or do anything. For example, if you are using Computax tax software to file the returns, Computax has a specific Excel template. Now, MProfit can generate all your capital gain data, short-term, long-term capital gain details in a Computax specific format. So system will retain the exact column structure, which is supported by Computax. Same goes for other softwares also. So this will definitely help you uh, and you don't need to rearrange the columns when you actually do the filing work. So we have these different tax software reports available in all our versions basically. So you can definitely use it. Uh, you can also use a standardized capital gain format which has all the details, but otherwise a specific tax software formats are there. Also, if you are using government portal to file the long-term gains, you can also use Schedule 112 your ITR format. So let's go to the next slide, a buyback taxation.
Yes. So now, in buyback, there has been a significant change in the way buyback will now be considered for capital gains perspective, and also, from the way buyback will be treated as a part of your income. If any company is doing a buyback post 1st of October 2024, so if any company has done buyback after 1st of October 2024, then the buyback will be treated as income and TDS at 10% will be charged. This is exactly same as how we treat dividend income. So buybacks will now be in line with the way dividend is treated. So any income that you have, any buyback which has happened, the buyback amount will be treated as a dividend. It will be treated similar to a dividend income. That is, it will be added to your total income, and TDS at 10% will be deducted. So if you look at the example on the screen here, there were 100 shares bought in 2020 at 40 per share, total cost of 4,000. In November 2024, that is after 1st of October 24, 20 shares were bought back at 60 per share. So 20 shares into 60, that is 1,200 rupees becomes your taxable income, and 10% TDS on 1,200 will be deducted. This is the first provision. The second provision is the capital loss on buyback, which means that the original cost of shares for the buyback shares will be provided to you as a capital loss, which you can set off against capital gains. So, in the same example, if we see 100 shares were bought at 40 rupees, and out of which 20 were already bought back, right? So, the for those 20 shares, if you multiply 20 into 40, the original cost of purchase, you get an amount of 800 rupees, which is the capital loss on buyback. So this capital loss can actually be set off against capital gains, when against any kind of capital gains that you have. Right? So normal set of provisions will be applicable in this case. So for buyback, the provision was different till 30th of September 2024, which has been going on since many years. But now there has been a significant change. Post 1st October 2024, any buyback will be treated as a normal income, and TDS at 10% will be charged on this buyback amount. So the amount of buyback per share multiplied by the number of buyback shares will be calculated as your total, it will be added to your total income, and 10% TDS will be deducted. And the original cost of purchase for these number of buyback shares will be provided to you as a capital loss available for set off as per the capital income tax provisions relating to carry forward and set off. So we'll just quickly show you, if there is any buyback, how you can actually see the income in the income report.
Yeah, so for that, I have added one stock, SM Auto Stamping, and there was a buyback around November or December last year. So the purchase was long back in 2020, for example, and this was there was a buyback which I have added it. You can definitely add the buyback transaction. We have provided the option under other transaction. You can go to add off market transaction and choose the buyback option from the list. We have also enabled the TDS field now. Earlier, the TDS was definitely not applicable, but now as the buyback is treated as an income, there is a 10% TDS. We have enabled this TDS field for the buyback form. So I've added this buyback entry already with 10% TDS. You can see this effect in our income report. So to see the effect, you can go to report section, select income and other, and you can use either income report summary or you can use income report detail to see this. So I'll just generate this report. So this is an income report and buyback will be shown as a income along with the TDS. So as you see on the screen, income type is buyback, gross amount is shown. There is a 10% TDS and it is showing net amount as well. So this is now properly handled in MProfit as per the new rules.
Right. So thanks, Tanmay. So this is broadly what we wanted to cover from today's webinar. We've covered all the different taxation capital gains rules as per the new budget provisions which came in last year, July. Depending on that, there have been several changes in the way holding period is calculated for certain asset classes, and for certain asset classes the taxation amount has also changed for short term and long term. Be it stocks, mutual funds, we've covered all of those things. All the listed assets are covered by MProfit in their capital gains report. Like Tanmay showed you, you can click on reports, go to capital gains ITR format, select the period that you're looking for, and for all the different asset classes you can generate a report. We also have a schedule 112A ITR format, which is for your long term capital gain needs, right? And as we also explained, we are also supporting certain tax software formats. So if you or your chartered accountancy firm are using any of these tax softwares like ClearTax, Spectrum, CompuTax, Winman, etc., you can download the capital gains in the exact same format in which it is required by these tax softwares. Okay, now we request members to kindly post your questions in the Q&A section. So we'll, take a few questions from there. But please note, if there are any questions relating to the way tax is calculated, or if there is any provision to see the tax calculation, please note that MProfit only provides capital gains report to classify the gains into long term and short term. We will not be providing any tax calculations as such. Okay, I think we've tried to answer many questions, but if there are any technical questions regarding tax assessment, like I can see some questions, and any specific tax related questions, we request you to also please consult with your chartered accountancy firm to get the exact way in which the tax will be calculated. What we have shown you today is a guiding principle of classifying different investment asset classes into short term and long term basis the budget changes. But if you have any technical queries, you can of course reach out to us at support@mprofit.in. But for any tax specific guidelines that you want more clarity on, we request you to please consult with your CA, as they would be better advised to better equipped to advise you on this. Okay, Tanmay, anything else you want to add?
No, that's it from my end. So, want to thank everyone to take
Yes.
out the time and join this session on a Wednesday afternoon. Thank you so much to all the members. If you have any queries, if you need any further assistance regards to generating the capital gain reports from MProfit, or if you need any other help to set up your portfolios, if you want to try out the application, please let us know. Our support ID is support@mprofit.in, and our team can get in touch with you.
Thank you so much for taking the time out, and we will definitely be sharing the webinar recording in a couple of days' time so that everybody can refer it once again.
Thank you.
Thank
Thank
you.
you,
Have a
everyone.
great evening, everybody. Thank you so much.